Good morning everyone and welcome to my more important analysis videos on Monday 3rd of April with me, Rich, market analyst at Handhead Markets. We've got relatively sort of sedate, really quiet open to market trading today, nothing too significant in terms of direction. You've got the dollar that's basically flat on the day, nothing really doing in terms of where the dollar is moving, and Treasury yields, similar sort of story really. So let me just so the 2-year there and the 10-year there, basically flat on the day. So not really getting a great deal out of this market at the moment on the first trading day of the quarter. Equities had been sort of more positive earlier. They sort of came back towards mixed to fairly sort of neutral. The DAX is outperforming again, which is interesting, but generally speaking we're not getting again too much in terms of market direction. So we're sort of looking out for the catalysts really, and at the moment there's the ISM manufacturing data this afternoon. We had some PMI data for the European countries today, well, starting off with the Tankan survey, which was sort of mildly positive to a little bit mixed on the Tankan, but it didn't really get a great deal of direction out of the Asian markets. But generally speaking, the European PMIs have been fairly disappointing really. You look at the UK manufacturing PMI there, slightly underwhelming, nothing too much in terms of the Eurozone final manufacturing data, flat, and a little bit down on the French number. So yeah, nothing too significant in terms of direction this morning. We're looking out for the US ISM manufacturing data this afternoon. 57.0 from 57.7 last month. That would still be a pretty strong data reading though. The ISM data for the States recently has been very strong and generally supportive of rate hikes and dollar strength in due course. So my chart today is this FTSE 100. Now I sort of looked at FTSE 100 on Friday, and you can see I think that what potentially could be this head and shoulders top pattern, because we had that strong bear candle on Friday, opened at the high of the day, closed at the low of the day. You don't often get that, and just generally sort of putting the recent run under pressure. Now sort of zoom back here and you've got this uptrend channel that FTSE has been in for about 12 months really, but the bottom of that trend channel comes in around about not a million miles off that neckline today, that neckline at 72.55, whereby, which was that low from last week, and then the uptrend channel comes in around 72.37, 72.40 area. So the trend higher is under pressure, I think, and the fact is that this run high just rolling over. Look at these momentum indicators, the MACD lines especially beginning to gain traction to the downside. The stochastics having been positively configured throughout January, February, March, and now sort of more neutral to negatively, or at least correctively configured anyway. And I think this sort of all reflects the pressure that FTSE is facing. You've got sterling, which is sort of holding up fairly well, which would generally put FTSE under downside pressure. And I think if you do see a drop below that 72.55 level of support, then that would complete this top pattern and certainly push you back towards the lows around 71 figure, I think, in due course. So that is certainly one to watch for the coming days, I think, this week, but not really that close to it now, but certainly at the moment, with Friday's bear candle formation that we've started to see the market rolling over again. You need to see that that resistance from Thursday's high at 73.85 taken out to really abort that pattern. But certainly you can see here the sort of topping phase that's going on FTSE potentially, which would complete, as I said, below 72.55. So I wish you good luck in your trading today, and I'll speak to you later.